but the year for taxes is just different from the calendar year, right? And so instead of January 1st to December 31st, it is, this is your tax year. Now the real confusing part is they're due November 15th. So this is what freaks everybody out. So from July 1st to June 30th is the tax year. So we are in the 2023-2024 property tax year for Jackson County. So what that means is if I sell my house, closing is July 1st, there's no taxes that are going to be prorated because July 1st, the new owner owns it and they start accruing taxes. Now from July 1st to November 15th, the owner has occupied the home and has incurred taxes, but has not yet paid them. Sometimes they pay it November 1st, but for like this purpose, we're assuming it's not paid until November 15th. Is that fair? So if you sell 11/15, the buyer is going to pay from July 1st, which is in the past, through November 30th on the 15th if they pay in full. So that means that all of July, all of August, all of September, all of October, and half of November, so 4.5 months, is a charge to seller. They owned and occupied the house for 4.5 months, incurred 4.5 months of property taxes, and paid none of those taxes because they closed the day before the taxes were due. Does that make sense? So if you sell December 1st, you have paid the taxes through 6/30/2024. So that means that all of December, January, February, March, April, May, and June, so 7 months of taxes, the buyer credits you because you paid through the end of the year, but you only occupied through December 1st. And if you have a mortgage, the mortgage companies always pay in full. The other option is to pay in thirds, but that's neither here nor there. The title company or the closing agent is going to look at if the taxes are paid, and then they will prorate them, just like you would prorate stuff on a calendar year. But the year for taxes is just different from the calendar year, right? And so instead of January 1st to December 31st, it is July 1st through June 30th. So he's going to close 11/28. How much are the taxes? He's got $4,000 in taxes. So then intake 4,000 divided by 365. That is $10.95 a day. So he has paid taxes through the end of the year at this point. So he's going to get all of December, all of January, all of February, all of March, all of April, all of May, and all of June. So that's 7 months and 2 days credit. So 212 days, assuming they're all 30-day months, which they probably aren't, right? So 7 times 30 is 210 plus 2. So 212 times 1095. He's going to get $2321.40 back, approximately. Now, the title company will give the exact credit. That's a prorate. It's paid once a year, and then depending on how long you've owned it before you bought or sold it will determine if it's a credit or a debit and what time it was done. So we know that the taxes were paid through the end of the year. So he's going to get credit from this date to this date. And it's going to be a daily rate based on what the taxes were. So yes, he's going to pay the taxes and he's going to get his money back. And on top of that, there's called impounds for taxes and for insurance. Every month, most mortgages, principal and interest are paid. That's the loan. And then an impound account, which is a trust account on your behalf, pays taxes and insurance. They divide it by 12 and usually have 2 months in reserves. He's going to get all that money back as well. So he's going to get credited for his taxes on the settlement statement. And then the lender is going to issue him a check to zero out his impound account. Or some lenders reduce what is owed on the mortgage and don't pay him back. But he has to call his lender, and you can get an estimated settlement statement from the title company to get this. So just request an estimated settlement statement. It's already in escrow, so they have the taxes, the close date, all the costs.